Mhm.
Good afternoon, everybody. It's Maureen Powell with All Western Mortgage, and I am here with my partner, Miss Arlene Donaldson with Fathom Realty, and we are here to talk about market updates and the process to get started with your home buying process from loan to all the way to purchasing a house. Miss Arlene, you want to go ahead and introduce yourself?
Hey, I'm Arlene Donaldson. I'm real estate agent here in Dallas, Texas. So we're local, and of course, Miss Maureen is here. She is more expert in mortgage side, and we will give you the insight on the market and the process of buying a house. So it will be fun today.
Absolutely, absolutely. So today I'm going to let you guys know rates are kind of up a little bit based on everything that's going on in the economy. I want to play something for you guys about what is going on with the market. So here it goes. Can you see my screen?
Yeah, we saw it.
Okay,
Well,
perfect.
Jobs Week kicked off with the JOLTS report for the month of December. That's job openings and labor turnover, and a big drop in the amount of openings. I guess those looking for employment are saying, "Don't you want me, baby?" Boy, oh boy. Song kind of gets stuck in your head a little bit. As far as the market goes, well, the market's near stuck at unchanged levels. Both the 10-year Treasury and mortgage-backed securities, very little changed. However, after the JOLTS report, we do see that both have been improved. So the JOLTS report helping us. What was the JOLTS report results today? Well, it came in showing 7.6 million job openings. Now get this, that's like 550,000 decline from last month. It is also about 1.3 million less openings than where we were a year ago. And I just think this visual could put it in perspective for you. You remember back a couple of years ago, 2.5 years ago or so, when we had 12 million openings. A year ago, 8.9, now 7.6. And these lower job openings likely would lead to less hirings, and that likely would be something that the bond market would like, and also probably put us in a position where the Fed would be not only acting in a way that would ease interest rates, but speaking in a way that would be more welcoming to the marketplace. Then you got a little breakdown on where some of the strength came from, some of the weakness, but also some of the other metrics that they give us.
Yeah, there was a lot of sectors that shed job openings, but some of the biggest ones was professional and business services, as well as healthcare and social assistance. The strongest sector was leisure and hospitality, which does include the waitress working at a cocktail bar. But overall, this was a bit of a softer job openings report. And looking at some of the internals, well, the quits rate remained near some of the lowest levels that we've seen in many years, showing that there's not a lot of poaching and hiring going on from other companies. It's a signal of weakness in the labor market. And something the Fed likes to focus on is the vacancy to unemployed ratio. So what that looks at is how many job openings there are for unemployed people. Now, this recently in this report just fell to 1.1%. If you look at the peak a couple of years ago, this was at 2. So that means that there was 2 job openings for every unemployed person. Now it's kind of at parity, where it's almost 1-to-1. However, we know that these job opening numbers are highly overstated because of double counting from from anywhere, where you could post the same job in multiple states. But also the Wall Street Journal article showing that a lot of these job openings aren't even real and are trying to maybe make the company look a bit stronger, but they're not actually hiring.
And they claim that that's 22%. If that number is accurate, you'd be at a level that would be closer to 6 million job openings, and that would be less job opening, not even counting the double counting portion, right? Less job openings just based upon that than there are those unemployed. And then, of course, Dan, there's the mismatching. You might have a job opening, which you may not be skilled for. So even though it's open, it doesn't necessarily mean you could fill that job. So they may have physical requirements or skill requirements. I think that it's proven as well, Dan, when you take a look at what we've seen in the duration of unemployment and seeing that it is taking longer to find a job.
Yeah, and continuing claims, which finally clocked in a number at 1.9 million, even with the people's benefits expiring. But we also yesterday had a bit of a roller coaster ride with the tariffs with Canada and Mexico. Now, earlier in the day, we saw that Mexico had come to the table and they said that they were going to put 10,000 people at the border immediately. And they were going to create 2 new groups, one for security at the border and one for drugs at the border. So because of that, we postponed the tariffs for a month to make sure that these things happen. And then on Canada, a little later in the day, they came to the table as well, so that they were already putting some troops at the border, but now really held to the fire that they're going to put 10,000 of their troops there. And they appointed a border czar, or I should say a fentanyl czar, to really look over the drugs coming into the United States. So this was, it looks like now, a pretty good negotiation tactic where we didn't have to implement these tariffs, but we did have our neighbors now really take some actions to prevent the flow of drugs and illegal immigration into the country. So we're thankful for that.
And Dan, we've been pretty consistent in our messaging. So we've been telling you for a long time, as soon as the tariffs were.
So with all of that going on in our economy right now, our markets, as far as interest rate goes, it's been kind of flat. It had a little bit of movement yesterday. We were a little bit down. Today, it's moved up just a little bit with, again, everything that's going on as far as the president making its choices, for the lack of better words. The market right now is, as far as interest rate goes, is kind of flat as of today. Now, does that mean that it's going to go up or go down throughout the week is yet to be seen, and it has been a little bit volatile as of last week. So that's where we're at so far in the market. Just want to kind of get that out there as far as what Mr. Habib was saying. I always listen to him as far as what's going on in the market, as far as jobs, any reports that come out really does affect our interest rates.
That's that's a really good insight for them. This is the whole country, right? You're talking about what's going on in the country,
definitely
right?
what's going on today, or what the president is doing with the tariffs with Canada as well as Mexico, and even with China. Even China has put on their own tariffs against the United States. So and all of that affects our interest rates, affects if
Pricing, house pricing.
Home, it affects lumber. If Canada decides to put tariffs on lumber that comes here to the US, that affects lumber for building homes as well. So all of this, of what goes on in the US, or any decisions that our government makes, affects the housing industry and also the interest rates.
Yeah. And just for our viewers, the interest rate is mostly national, right?
Yeah, so right now the average interest rate right now as of today is at 7.07. That's a national average. On an FHA is at 6.47.
Oh, still on the 6, right? So still on that pricing. But for you guys, for the interest rate, it's really different for a local. For us as an agent, we really know the local market area should be local, because based on the pricing is based really on the demand, based on the location and what's really locally going on. That's why me and her partner together with this one, the interest rate and what's really the local going on in DFW, right?
Yeah, so with our rates here at All Western, with anybody that you go to, right? Builders aside, because they buy rates in bulk, right? Builders are a little different. They buy rates in bulk, and they're able to do a little bit more creative when they price their loans. So with us, we're very competitive with our rates, and how clients get rates is basically, it is going to be based on credit. It is going to be based on their debt to income ratio, how much money they're putting down, how much reserves they have. All of that compiles into what type of rate they're going to get.
Okay. So make sure your rates is good, right?
Yeah.
So And speaking of that one, we last week we go what's really the process of buying a house. So you're talking about different type of loans and everything. Can you brief explanation again? If you're using the FHA loan, the conventional, and other type of loan that you have available in the market. So it's not, we're not staying for this type of loan. You have more available. Can you tell about that?
Yeah, so I think last time that we spoke, we talked about your traditional loans. So traditional loans are your FHA, your VA, your conventional, and even your USDA,
Yeah.
right? So
Mm-hmm.
your VA is 0% down payment.
Uh-huh.
Basically, it's not credit score driven, but it is credit driven. So it's not
Mm-hmm.
a matter of what your credit score is, it's a matter of what's on your credit. And there is still closing costs with VA, as well as USDA. So USDA loans are going to be a 0% down payment. So 100% financing, still going to have closing costs. And it is a 640 credit score minimum.
Mm-hmm.
And it is for your rural areas. So outside of DFW, outside of Dallas, outside of Fort Worth, but more into like your Anna, Sherman, maybe in the outskirts of your main cities, right?
Yeah.
Those are going to be your USDA loans. Your conventional is minimum 620 credit score, 5% down if it's your second time purchasing a home. If you're a first time home buyer, you can actually get a conventional loan at 3% down. Okay.
Mm-hmm.
FHA, it's 3.5% down. This is for more of your first time home buyers, more of your credit challenge buyers, 580 credit score minimum. But even with FHA, there are still requirements required, right? 3.5% down. You may need if you are at a 580 credit score, you may need to have some reserves. Okay, so just keep that in mind. Reserves meaning that you may need to have 2 months reserves of your principal, interest, taxes, and insurance payments in a bank account. If you are needing down payment assistance, you need to have a 620 minimum credit score. So outside from your regular vanilla traditional
Yeah.
types of loans, we do have different other loans that we offer. There is investment loans that we offer, right? If you are looking to invest in a property, and Miss Arlene is very good at this, like she can help you with investment properties. We have different types of loans that we could help with that. We have private lending, we have flip and fix loans that we can help you with. We have DSCR loans that we can help you with. Now, those loans do require a little bit more of a down payment, and they do
Mm-hmm.
require a little bit more of reserves, right?
Yeah.
If you are self-employed, we have bank statement programs, which requires 12 months to 24 months bank statements. We also have a P&L product, which is a profit and loss statement. And we also have a 1099 product. So those are for your self-employed borrowers. You are going to need to have a certified CPA in your back pocket because we are going to need some information from them. If you are needing a construction loan, we also have that. So if you want to buy land and build your dream house on that, we can help you get that, right? We have renovation loans. We also have your what do you call that? Reverse mortgage. So for my elderly folks that want to have a little bit more freedom and, and they're over 62 years old and they want to do a reverse mortgage. We have a purchase product for a reverse mortgage, and we also have a refinance for a reverse mortgage where you don't make monthly payments on your mortgage. So that
Wow.
is something that we also offer. So there are different types of loans under the sun that you can do, and we can get really creative. And I mean, I could literally talk to you about all the different types of loans that we have. We also have a lease to own product. I don't know if I mentioned that. I know I've told you about that a
Yeah.
little
Yeah.
bit as well.
Uh-huh.
We have a lease to own product where you actually have ownership on a property that you pick out, and it's mirrored to our FHA loan where you only put 3.5% down, and the equity on that property is yours. You just have to have 3.5%, a 580 credit score, and 12 months rental history that is in good standing.
Wow, that's a
Yeah.
lot of, it really depends to what you need
Yeah.
at the moment, right? And depends to your finances, right? So it's
Yeah.
not really, I'm scared because, it depends. You just really need is just talk to us what is in what situation you have right now, and we can
Exactly.
just
Yeah.
fit in your needs. So wow, it's a lot of loan. So I'm excited for all my client out there. You call us and we really need to sit down for you, and we want you to have a house. At the end of the day, if you're renting 100% of your rent, it's like, hey, the mortgage rate right now is 7%. If you're renting, guess what? The mortgage rate at the moment, 100%, right?
100%. Yes. And that's a good point, because like our lease to own product, if you are renting right now, whether you're renting a house or you're renting an apartment, all of that equity, you're just paying into this to the owner, right?
Yeah.
They're keeping all of that. With our rent to own product, you're leasing to own your own property. It's your property, but all that equity is yours. You can sell that property, and the money that you get from that property is yours.
That's a
That's a
good one.
huge difference.
Yeah, that's a good product.
Yeah.
How about the credit score in that one? They have very
580.
strict.
580.
Oh, 580 only.
580 credit score.
That's really good. So I'm so excited. Hopefully all my buyers that still holding on since like 2 years ago, 3 years ago, can I get a different type of loan right now is your chance. All you need to do is like really sit down with us and give us what's really the issue, what's going on, why you're still renting at the moment, right?
Yeah, and you can be one day out of bankruptcy to use that product.
Oh, wow.
Yeah.
And it's just there. All you need is ask for help, right?
Pretty much.
And see, at the end of the day, like on the when we're watching the news, they said maybe there's a lot of job gonna come this year, right? So we're excited for that one as well. If you are unemployed at the moment, so hold on. And how many years they need for employment or W-2 before they can buy a house? I forgot to ask you that before.
Yeah, so for the most part, you're going to need 2 years of employment history. It doesn't
Okay.
have to be within the same industry. At most cases, as long as you are consistent in the 2 years, right? So
See.
I worked at Amazon for 1 year, and then I decided to work at Costco
Uh-huh.
the next year. That's okay.
Okay.
As long as it's
As
two
long as
years.
Same field. This is a lot of question. I received this one. I want to ask you. It's like
Mhm.
impromptu question. For the buyers that example, they have a house in other state but they living right now in Texas. Are they qualified to buy a house here in Texas? They're working here, but they have a house in other state.
Absolutely.
They can?
Absolutely. So the house that they have in the other state, we have to know what they're doing with that house, right? Because it's the house that they're leaving. Are they going to rent it out? Are they going to sell it? What is the plan for that property? So if they're going to
Uh-huh.
keep it, we need to know if they're going to have a rental person in that property, right? And then what
Okay.
type of loan do they currently have? Do they have a mortgage on it? We just need to know what is the plan for that property. And then for the house that they have here that they're wanting to buy, can we fit the debt to income ratio of having two homes? As long as
Yeah.
we can fit that into their income and their debt to income ratio, then yes, we can make it happen.
That's good.
Yeah.
That's really good. So that's the answer. Some of my buyers that they calling me if they can. My answer is I need to ask more better than me for those questions. So your answer is yes. It depends to
We just have to
uh
figure out the situation,
it
Let's
depends to
figure
their
out the
situation.
situation, and then let's figure out a way to make it work.
Okay, that's awesome. And can I share my screen, Ate, a little bit?
Yeah,
So
absolutely.
for just to give you a little bit what we're talking about, so we kind of like go back to, okay, I need to share right now. Okay, share my screen. And we're here right now. This is the market updates. Okay. This is what's going on in Dallas area. If you are, hey, we're talking about, how to buy a house, how to sell a house, and what's really going on in the market right now, right? I'm so scared to buy a house. Is people is still buying a house right now? My answer is this one. This is the entire market watch and DFW as of February 4th, 2025. And we have like this listing amount. So 1,101. This is only for, I'm doing this one only for 3 days. Okay. Or we can make it
Wow.
today.
There's a lot of homes on the market.
A lot of home in the market right now. Just for today, look at this one. And also a lot of price reduction. So if you are still buying a house, right now is the best time for you to get a good deal. But the thing is, a lot also pending. So we have a lot of pending also going on in the market, meaning people are buying right now too. See, so a lot of houses in the market at the moment, right? A lot of price reduction and people are buying also. See, 978, this is a pending just for 3 days. So the market is still doing really good, and a lot of expired too. I need to call all those people. I need to.
Yeah, but let's go back to that pricing decrease. 1,285. That's 1,285 pricing decrease in the DFW market, right? So
Yeah.
imagine if right now you're looking to purchase a home and you happen to run across one of those properties that decrease their home by 10,000, by whatever they decrease their home. This is an opportunity for you as a home buyer to say, hey, I need help with either my closing cost or I need help with paying down my rate.
Kind of
This is,
negotiation, right?
yeah, this is a great way to have a conversation, right?
Yeah, it's really great way for this.
Yeah,
You don't know.
it's a great way for, because it's a win-win for both seller and buyer, because one, they get a contract, two, you can negotiate that price decrease where both of you, the seller and the buyer, doesn't have to lose out, right?
Yeah, I
Instead of
agree.
having a price decrease, why don't you use that same money and help me as a buyer?
Yeah, and then it's a win-win for both. You
It's a
sell your
win-win for
house.
both.
Yeah, you
You
can
sell
move
the
on.
house and you help me as a buyer. So 1,285 homes, that's amazing.
Yes, so that is really what's going on in the market. And I just talked to, today we're talking about the market at the moment. So based on the DFW seasonal home price trend, okay, this is just a fresh study that I attended since 1990, January, February, March. So that is the lowest if you want to buy a house really is before the spring and summer, because when it comes to April, May, June, July, the market is going up the price. So if you really want to buy a house at the current moment, you still a lot of negotiation for all this price reduction. And also, even the new construction, they give a lot of incentives for January, February, March closing. And guess what? When we go to April, May, June, July, the price of the house is increasing based on the seasonal home price trend locally. That's why I'm talking about what's really going on locally in our area. So
Right.
this is a good, it's like this is really live information for you. If you're watching in the market what's going on, this is really the best for you to look at. And also for the expired, so what we're gonna do, this one, either they're gonna go back on the market. So it expire. So it's gonna go up the new listing. So you have more houses to choose from, and also more negotiation. Hey, it's a lot of houses in the market, and you can, a lot of wiggle room for you as a buyer to get the price that you want and start at the moment, not go to the spring or summertime, which is based on our seasonal home trend. It will increasing the price.
Right.
So it's a good one, right? And this is really live. So anyway, I will also give you uh this is the buying process also that we talked about last week. And we stop here. The where we stop the last, I think we
I
stopped
think we stopped on we talked about the different types of loans.
okay, the financing.
So we talked about
Okay.
the financing already.
Yeah. So we talk about the financing already. So this is really the type, if you want to buy a house, this is all the process. And we stopped here the last time. And I think we also, Miss Maureen, talking about, different type of loan. What is for you? And of course, how you use your power based on the current condition of the market if you want to buy a house in your favor with the pricing down, and you can use, that's what he said, seller concession means we will ask the money for the seller to give you at least closing cost or buy down rate, which is the rate right now is 6.25% at the moment current market, right? So what is really the important of the mortgage rate means your monthly payment is higher, right? If the mortgage rate is higher, means your monthly mortgage is payment is higher. When the mortgage is lower, your monthly mortgage is lower too. So that's really the correlation. That's why we discuss about the mortgage rate and the first time, and that is a knowledge or will help you. And that's why Ate Maureen is here to explain about that correlation to each other. Yeah, and after that, if you're under contract, means you already know the process. You already, hey, this is my monthly payment and all the good stuff. And you're really close to closing. That's it. It's not hard. Okay. So I'll stop sharing right now. And that is the process of buying a house. That is the current market updates. And we will just close this and, class for what is the correlation. Give us a little bit of insight about the mortgage rate and current monthly payment in correlation to both what we're talking about, Ate.
Okay, so as far as the monthly payments, now
Yeah.
your monthly payments are going to consist of your principal and interest payments, right? So whatever your rate is, plus your principal. And then we're going to add taxes and insurance. And then you're also going to have mortgage insurance. Now, there is a difference between mortgage insurance and homeowners insurance. Your mortgage insurance is basically what's going to protect the lender, right? Private insurance is the same thing when you're doing a conventional loan. And that private insurance is your PMI. That also protects the lender. So that's going to be credit based. Your mortgage insurance with an FHA loan, that is going to be 0.55. Okay, it doesn't matter if you have a 620 credit score or a 700 credit score. FHA is the same across the board. FHA does charge an upfront mortgage insurance, which is 1.75% if you're doing an FHA loan. That's an upfront fee. It is rolled on top of your loan unless you want to pay it upfront. So that's going to be rolled on top of your loan, and then you'll have a monthly mortgage insurance which is 0.55% of your loan amount. It's going to come into your monthly payment. And then you'll have homeowners insurance. Homeowners insurance is what protects your home. So if you have a fire, you have a like wind, hail, storm, you want to put a claim on it, your roof, that protects your roof, all of that. That's homeowners insurance. A lot of people get it mixed up, like, well, why do I have two insurances? on my monthly payment. And then you also have HOA. So we count HOA in to your debt to income ratio. But your HOA, which is your homeowners association, if you have one, that is something that you pay on your own. It could be a
Yeah.
yearly, it could be semi, it could be quarterly, but your homeowners association is something that you pay on your own. But when we calculate it in our debt to income ratio, we put that on there on your payments. So all of that is going to be your monthly payment. So you'll know exactly what all that falls into. Now, you wanted me to correlate that with.
Yeah, just correlate why these agents always talking about, hey, the mortgage rate is this, and what is the correlation between when I want to buy a house right now.
So mortgage
Just
rates,
just a simple one.
yeah, mortgage rates fluctuates, right?
Mhm.
Your mortgage rate is always going to go with the house. So you're not going to be locked in with a rate until you find your property. So every day your mortgage rates are going to change. So people are always going to want to know, hey, what's the rate today? Right? Because they want to buy the house. They never want to know.
Yeah.
They never think, okay, I'm going to go get it pre-approved and then I'm going to know what my rate is. Because it doesn't work that way. It basically is, I can tell you what the rate is today, but it's not going to affect you until you actually get under contract. Right?
Okay.
Rates are going to change. Rates
Change.
change
It's
on a
like a
daily
market,
basis.
fluctuating, right?
Yeah, it's always going to fluctuate. So you can ask me rates of today, and I can tell you what rates are today, but rates are so volatile that they're going to change with what happens in the market, in the economy. So if something
Yeah.
changes in the economy, just like when we had COVID, rates
Mm-hmm.
dropped, rates tanked. The only reason why we had the rates that we did back in 2021 is because we had COVID, right? So
Yeah.
that was an exception. But in today's market, if you want to know what the rates are, you can know what today's rates are, but that doesn't necessarily mean that's what your rate is going to be when you're ready to lock.
Okay. Okay.
Yeah.
So it really depends, right? Example, hey, what's the rate right now? I want to stay on this monthly payment. Example, I want to
Mm-hmm.
stay $3,000 on my monthly budget
Yes.
because that's the one I'm paying for rent. So
Mm-hmm.
what we're gonna do is we need to find a house and then we need to calculate. That's why the mortgage lender is for you. We need to calculate on that price based on your budget. And then what's really, example, the mortgage rate is 7. Okay.
Mm-hmm.
If the mortgage rate drop, meaning you have more, you can buy a bigger house. If the mortgage is lower, and then if the mortgage rate is higher, your house that you can buy is based on, at this price only. Is correct?
It, it can be, but it also depends on what your taxes are.
Oh, yeah.
Taxes
See?
make a huge difference on what your monthly payments are as well. So even though, like, I can tell you right now, if your rate's at 7, then
Yeah.
you're trying to buy a $350,000 house, just count on your monthly payments being around $3,500. Count on 1%, right? Because you got to count in there just what I talked about earlier is, your taxes, your insurance, and all of that. And then depending on where you're buying at, what city, the taxes in
Oh,
that
yeah.
city, the rate of that tax could be pretty high, right? So all of that is going to take a factor. Even if you go with a smaller rate, even if the rate is at 6.5, but then your taxes just jumped up,
Yeah.
it's still not going to equate to a lower monthly payment. So,
Oh, see, I learned too.
so it just really depends. So my biggest advice is always ask your lender to say, hey, I like this house. Can we get an estimate? Right? I tell my borrowers all the time, if you like something, let's talk about it. Let's do the numbers, right? Because rates
Yeah.
changes on a daily, sometimes twice a day. And let's make sure that your taxes, because taxes make a real big difference on what your monthly payments are going to end up being.
Wow. You see that? It's really, it's different, right? For
Yeah.
my understanding and her understanding is different. So all we need to do is really is like figure it out. What's your situation? What's your budget? And now the next problem is there. It's not really the problem. We're gonna know the number, right,
Yeah.
Ate?
And not just taxes, also homeowners insurance.
Yeah,
Yeah.
homeowners insurance, and also for us here we have different type of taxes pa. Example, we have paid, MAD,
Mhm.
HOA, you name it, right? So
Yeah.
it's
Plus,
really depends.
all of that takes a factor on what your payments are going to look like and
Monthly payment,
making
right?
sure that they all fit within the parameters of your debt to income ratio.
Yeah, she's talking about the debt to income ratio is malang mga utang-utang, okay? All your cars and all that good stuff, it's really you can afford it, right?
Yeah.
Per,
So
per
what
day.
you make, how much you make versus how much debt you have, your car payments, your credit cards, your student loans, all of that monthly payments, and then you add in your housing payment. That is going to make up your debt to income ratio. So lahat ng utang mo, tapos lahat ng how much you make. So your gross income.
See, it's really a lot to learn from this topic, right? So I'm
Yeah,
learning
we can
too.
talk about it all day.
Yeah, we can talk about this one all day, but at the end of the day, we're doing this one to educate you and
Yeah.
not to be scared on buying a house, not to be scared on ask questions regarding the market, regarding the process of buying a house. And we're really here to help you and guide you. And at the end of the day, we're really looking for your that you will not gonna buy a house that you will not, what you call that, you cannot pay.
Yeah, you
We're
can't afford.
looking,
Yeah.
yeah,
Yeah. So
just on the budget. We will stay on the budget, right,
yeah,
Ate?
stay in your best interest. Yeah.
Yeah, stay in your budget, not too much. You can buy 500,000 house and then you're making this amount of money and it's not gonna work for you. We don't want you to lose the house. And at the end of the day, you have still life, even you have a house already. That's my goal is that I told them, even you approve for $1 million, approval, if you think in yourself you cannot sustain that payment, please buy 500,000 house. You still gonna sleep there and live there. Who cares, right? At least you have still life.
Yeah, because you don't want to be house poor, as they say, right? You don't want to sit there and, pay everything, your whole paycheck goes into your house payment, and then you the rest of your bills, and then you don't have anything else to live with. And I will say that we don't count all of your income when we do your debt to income ratio. Depending on the type of loan that we do, we only count
Uh-huh.
a percentage, right? Because we know you have other bills. We know you still have groceries. We know that you still have light bills and other bills to live on. So we only count a percentage. So like on an FHA loan, we count up to 56.9%. On a conventional, we only go up to 50% of your income, right?
You
So
see
that's why
that?
when we say, okay, well, this is as far as we can approve you for, it's really for your own benefit. So we're not
Yes.
losing all of your income because we know you still have a life to live. You still have other bills. You still have to be able to take your kids to, soccer. You still have to pay for those things. Um, so that is
That's
why there is a limitation of how much income we can count. And most times we kind of try to leave a little bit of um, a ceiling, right? So with my clients, I don't want to go over 55% on an FHA loan because I know they're going to go out there and look for a house and they're going to go look for the most expensive house, or the taxes are going to come up a little bit more, or the insurance might come up a little bit more, that I have to have a little bit of cushion for that.
wow. See that? So it's really, really good. So you guys, thank you for watching. And this one,
Yes,
we will see you next month. It's a lot of information.
it is.
Me and her is like, learning each day. And we will share it to you, the knowledge, what's really going on in the market. And at the end of the day, we're here to help you when you are buying a house here in the FW area. And of course, if you need a lender that, it's really understand your situation, Ate Maureen is here to guide you with all the process. It depends to your situation, different life, different situation, in different, stage of life we have, right? So we're not forcing you to buy. For me, if my client asks me, "Hey, Arlene, when is the best time to buy a house?" My answer is when you're financially ready. It's not
That's right.
today. It's not, 5 years from now. When are you financially ready to buy a house? Because it's a lot, it's a big commitment, biggest purchase, and that's why my answer is different, right? It's not today, always when you are ready,
When
right?
you're
So
ready.
that's what we ended
Absolutely.
in this. So
And
thank
at
you so
Darlene,
much.
how can you be reached?
Oh, you can call me at 214-690-1233. And I love to guide you when you're looking to buy a house here in the FW area. So I'm in the north side. Pwedeng Tagalog, English, Bisaya, or whatever. We're here to help you. And Ate Maureen also talk Tagalog. Kung kayo ay medyo natatakot, hey, is English? She also talk Tagalog. So that's why I understand her better too.
Yes, thank you so much for joining us. I'm Maureen Powell, your mortgage lady. I'm with All Western Mortgage. Mabuhay. I am thankful to always have Ate Arlene here with me and always using me for her clients. Salamat sa inyong lahat. And we'll see you guys next time. Please feel free to share and like us. See us on Instagram, Facebook. You can join me at Maureen Does Home Loans. Ate Arlene is also on Facebook and Instagram and TikTok. You can what
No, I don't have in TikTok.
oh, she doesn't have a hit TikTok yet, but I'm gonna get her on TikTok. Watch.
Okay.
What's your Facebook, Ate Arlene?
Yeah, just my name and then Arlene, my realtor. So it's just there. We will post this one in our social media too.
Yes.
So you guys learn a lot from us. And next month again, I'm so excited. What's our next topic over there? What's going in the market? And we'll see you soon.
Thank you guys. Bye bye.